Welcome back for another top-notch video. This week we're going to be talking about the week of the 23rd of July through the 27th of July. Some things to note: we are, like I mentioned, in the middle of earnings season. If you guys have a TSP account, Roth IRA, brokerage account, if you guys have money in the markets, this channel is for you. We go over the broad indices through some ETFs and through some funds. That being said, we always start with a general overview, so let's get right into it. Something we like to start off with is this TSP talk. This is from the TSP website. Tom's comments. We saw some, like we said, some earnings season. Facebook had a big down week, so just keep that in mind. Some admin notes. We had that second quarter GDP number, and it came in at 4.1%. So that's pretty. Investors saw that as, I guess, it was kind of already baked into the markets. I think we would have saw markets increase on Friday if it was higher than like 4.5 or 4.6. That was they were kind of estimating for 4.0 to 4.1, so it was right where it came in on estimates. As far as the C fund goes, or the S&P 500, or our ETF IVV, as you can see, we've been going in this trading range between these two blue lines here, and we did have a gap back here in February. Still have not reached that all-time high, so we're still sitting in correction zone with the S&P 500. We have a small gap here and another gap here, as long as our moving average down here. Kind of interested to see where this will go, if we can break out of this trading range here, or if it will go down. We will look at our more in-depth charts a little bit later to give us an idea of what the probability says these charts will do. Moving on, we had the S fund. With the S fund, we did end up more towards the end of this trading range here, and I'll show you that on our other charts. That cup and handle was really not panning out to be so well. We're having a lot of resistance at the 460, a little bit above the 460 level for the Dow Jones or VXF or the S fund. I can't really see it break through there, and our charts, our more in-depth charts later, show what might happen with this. Moving on, we have the I fund. This is where we had our funds in the last week, and it turned out being a pretty good place. This was the last move we could make for this month of July, and we did see a nice little gain out of the I fund this week. I'm a little nervous with the dollar, and with it being in a down market, really hoping maybe it could beat that last lower high that we had here. We had we had our high here and then a lower high here. Really hoping that we can get above that $69 range. I'm going to show you another chart a little bit later on, which kind of shows where I think this range might end. And if need be, we might need to get out of this and get to the G fund before we can get back to the C fund or the S fund for next month. So just keep that in mind. Last of all, we have AGG, or the F fund, for bonds. And with bonds, we're seeing maybe a little bit of a bear flag forming here. We're at the bottom of our 50-day moving average. As always, nothing really all that spectacular from bonds. That being said, let's move into our weekly percentages. So with this week, we did see the S fund with a big down week. We haven't seen a red week for the S fund for most of July, honestly. The C fund was up a little bit, so that was good, up 0.5%, down a whole 1.5% on our S fund, and then our winner for this week was the I fund, which is where we had our funds at for the most part. And then for our F fund, or AGG, that was down again. Still negative for the year for the F fund, and for the first time this year, the I fund, well, not for the first time, but for the first time in a very long time for this year, the I fund is now positive for the year. As always, we have our G fund here, and you regular investors can't do anything with that. So moving on, let's get into a more in-depth analysis of each of our charts. Like I mentioned, this is IVV, or the C fund. With the C fund, we saw a downturn here, quite a big downturn on Friday, and we can see that on our charts as well. We lost 0.5% just on Friday. And with that being said, we had that gap, like I mentioned, back in all the way back in February. We were hoping that would fulfill that gap. It just didn't do that necessarily. We have two gaps here, one here and one here. Probability states that we could probably see it move a little bit higher, but I'll show you that on our analysis charts. So with our charts, with IVV or the C fund, We did see an uptick in data just a little bit, so our weekly fund is rising. Not a bad place to have your funds. Like I said, I could probably fill those gaps, but if we look on it from a 2-day perspective, we did have our first 2-day bar down, so just keep that in mind. The last time we had a bar down, which was back in June, we ended up taking, we lost, what was that, 279, and we went all the way back down to 272, so just keep that in mind. But the weekly chart is doing very well. A lot of indecision these last couple weeks, really close bars. We could either really see this start to take off, or we could see a little bit of a decline before it starts to take off again. We do have one more week of earnings, so we could see some good stuff going on with that. And then after that, I could possibly see a little bit of a decline before we continue this uptrend here for this IVV. Not a bad place to have your funds, though, for the most part. Moving on, we have the S Fund or VXF ETF. This is the Dow Jones. With the Dow Jones, we saw a penetration of our major down trend line here. This trend line has been holding ever since early April. So I thought we were going to have more down action here, and it ended up holding very, very well. And then we had a very big rise after our decline, and now we've just seen some consolidation in regards to that. We did penetrate not only our trend line, but we did penetrate our moving averages as well. Kind of interested to see where this goes now that we've penetrated this. I could possibly see it coming back down to 118. Like I said, that cup and handle, which was right here, here was the cup and there was the handle, didn't really hold. We see a lot of resistance at that 122 line. On a chart perspective, on a more in-depth analysis, we are losing our weekly chart. It has not bounced back like the C Fund. We see a more direct pattern with this, with our energy decreasing with our DO oscillator. So we went from 218 2 weeks ago to 161 to now 0.35. And if this line crosses, we have not seen a negative cross since back in February. And if you remember, that's when we had our 10% correction. So just keep that in mind. We are getting very, very close to that blue line crossing the red line. As you can see from our price action, a lot of indecision, a lot of not moving. Since that first week into July, just a lot of indecision. We have a spinning top here, which is a red line on the bottom, red line on the top, showing us that there's just indecision in the markets. If we look at our 2-day chart, we did not cross that blue line, did not end up crossing the red line, and we are headed back down into negative territory. Not a good place to have your funds at this time. That's why we ended up moving funds last week. We ended up moving funds back on Monday. We once we saw this bar start to form, we didn't like it, and so we ended up getting out of this fund and moving it to the I Fund instead. And I think that was a good move. I don't think we'll be back in the S Fund or VXF ETF for a little while for the future. Just not a lot boosting it up. It didn't have the earnings seasons like the C Fund did for the most part for those companies, and it just I think this could be the ultimate predictor of the C Fund once we end earnings season. So just keep that in mind as we move forward. Let's move on to our next fund, which is the EFA or the I Fund ETF. This is international markets. With international markets, we have been in a decline ever since February. We saw some just some double tops here, and once we saw those double tops, we've seen a lower high, and I predict that based off these trend lines and probability that we could probably see another lower high here right around the 69 level. We said we were possibly going to sell. We are in the I Fund right now, and we said we were going to possibly sell once we got to 69. So just keep that in mind this week moving forward. Make sure you check our Facebook and Twitter accounts to see when we make our trades. We could be doing a week trade this week from the I Fund to the G Fund just to make sure that we don't get another plunge like we saw here. We do still have some open gaps here, so I could see it fulfilling, maybe getting up above 160 a little bit, but nothing above 170 at this time. I just don't feel very confident about that. But from a chart perspective, if we look at EFA or the I Fund, we are seeing very, very good things on our weekly chart. Price is reacting to these bars getting lower. This was our second week where we have the oscillator was coming out of negative territory. Granted, we have not been out of negative territory ever since February with the EFA fund. We got close here, but we didn't have that line cross. Well, we did get out of negative territory, but not by very much, and we didn't have a true crossover. What we're really looking for and banking on with our moves for this week is the 2-day chart. We've kind of been following this chart, and if we see a decline on it, like we did with with IVV, we might end up going to the G fund, just putting some money in some cash, and in the G fund, which is just pretty much cash for you guys that have IRAs, just to kind of see what the markets are going to do. There's nothing wrong with sitting on the sideline for the short term before markets make a decision on what they want to do. We don't want to be on the wrong side of decision. So we are going to stick with EFA for the most part. That's what we're in until we see something different. As you can see, these markets, we went from 457 to 554, so almost a whole percentage point, and now we are almost less than half a percentage point. So this market could be topping out. If we look at our 2-day chart, on our 4-hour, we are on a small decline. Now keep in mind that this chart has been in the blue line has been above the red line for a significant amount of time. And also with that, we've had a lot of green. We have not had a lot of red bars with that. It hasn't reflected that necessarily. So if I had to put a dollar percentage on it, I would say probably right around 69.50 or 69.40 is probably a good predictor of where we would want to probably pull out, take our profits that we gained, and wait for the storms to clear, which could be in August with earnings coming to an end with other commodity funds. That being said, let's go into bonds real quick. As always, we've never been an advocate of bonds for this entire year. We've had a lot of lower highs. We had a lower high here, a lower high here. We're seeing a lower high here. Seeing a bear flag start to form here. We broke this trend line. We had this indecision point last week. We didn't know if this was going to go higher or lower based on the probability of our charts, which I'll show you on these charts here. We decided that this would not be a good time to get in the funds, and sure enough, we dropped all the way back down to 106 level, which was a pretty big decrease. If we look at AGG for our funds and our bonds, AGG, ETF, bonds, or the F fund, this is our second week decline. We never did get into this fund once it took off. It took off right around here on June 1st, and as you can see, just not a lot of price movement, guys, and that's why we didn't ever get involved. There was better markets out there, so this wasn't a bad place to be, but we had a better place to be, so that's why we did not get involved with AGG. As it starts to go back towards its decline, especially on these charts, we are going to watch it but not get involved, as always. With that being said, guys, that is our major indices for this week. The only thing I would want to bringing you back to these charts here before we show where our funds are allocated. As you can see, the leader for till we come to the end of July here is still the S fund sitting at 7%. If we look at top-notch accounts for this week, I usually like to bring this up when I'm ahead, but as you can see, for our gain for the year, we are sitting right around 8.77%, or with TSP fees built in there, or without TSP fees built in there, we're sitting around 9.5% for the year. So as you can see, we are still beating most funds if you were to watch this channel and put your funds, not saying you need to, I'm not a professional or put my advice, but I just like to make these videos. If you were to follow along, you would be somewhere in the vicinity of 8.5%, or without fees, around 9.5% for the year, versus just putting your money in the S fund and leaving it, you'd be right around 7.25%, or just barely breaking even, or right around not even what the funds average for the entire year. Now, granted, we still have a half year left. We have a lot of room to run, so I'm not at all trying to make myself look any better. There's a lot of ground still to go. We're only at the halfway point of this year, but for this channel, we're doing very, very well. We're beating all the life cycle funds and all the commodity funds at this time. So if you guys have any questions about my percentage or where I'm at, please let me know. And with that, we'll get into what we are looking at. And with that, we are currently sitting with 100% of our funds in the I fund, or the EFA ETF. So keep that in mind for you brokerage people. And for the year, we decided to make a little change. So it is towards the end of the month, so we got to think about where that new paycheck funds are going to be coming into. So we decided to allocate those funds from the S fund to the C fund. So, and that could change. We'll see about that. Ideally, it'd be nice to get a little drop like we did with the S fund. Still debating whether to put it in the S fund or the C fund, but we moved that allocation change to the C fund just because charts are supporting the C fund right now versus the S fund. So moving forward, that's what we have is EFA or the I fund, ETF. We're sitting at 100% there with new allocations going to the C fund. If you guys have any questions, go ahead and write those in the comments below. My question for you guys is, do you think this was a good move that we pulled off for last week, moving our funds to the I fund? You can write those in the comments below. Please like, subscribe, or share. It's always good to have you guys following along. I appreciate your comments. As always, I'm not a professional or anything like that. It's just my opinion. So just keep that in mind. And if you want to follow us on Twitter or YouTube, these are the links right here. Another top-notch video. We'll see you guys next time.